CRX.X, Morgan Stanley Commodity Related Index. Now, when the FOMC meeting had come around a few weeks ago, before they announced it, what happens in these QE1s, 2s, and 3s, we all know from prior years of how the commodity markets get really beautiful runs, get good bull runs like it did in 2009 and 2010, right up to the 2011 where they couldn't go any higher. This is when other periods of time when stimuluses were being worked by the Federal Reserve, it created a bubble in the commodities at times. And nonetheless, when we talked about this trade working and it was the most beaten down sector, I just was talking more in the terms of China also has to have something to do with this. We can't trust what they say, and we're not even going to attempt to. Therefore, with their economy at all time multi year lows, some of these names may not act the way that they used to act when certain of the leaders in here that I have covered are, well, they benefit from the Chinese and they're not spending money. And so there are some names in here that are important. The ones that we've been looking at was the FCX and Hess and whatnot. But let's just be clear that part of what I said was that it was the most beaten down part of the market and it had long-term weekly consolidations. With that QE3 and massive stimulus is put in, it would say that this commodity market related to that event in its own level, its own capacity level of those injections by Mr. Bernanke there. QE3, massive checkbook. Okay? It's open. That in 2013, commodity prices would get driven higher based on that, and inflation would be a problem in months like June of 2013. That would just be the part where the higher highs from that level. So you go in toward the end of 2013 and into 14 there, you could be at a very inflationary problem. That means that potentially longer term, based on that injection of liquidity and bidding up commodity prices, is that they could go to all-time highs potentially, but that doesn't mean that that happens in the short term. And some of this was also involved that not only did we cover that, we also, and here are the stocks once again. They're all right here and they're beaten downside of the market and the leadership's in here. They're going to be tradable at some point, but the thing like down here, Deutsche Bank Energy that we covered, the DXE, same thing in here. You want those Chinese spending money and you want our services uh, benefiting from those governments around the world and using these companies in here. And so what I am saying is that there's going to be some pullbacks, and you could pull all the way back down here. And as far as the expansion and precious metals and various other products, gold, silver, all of these things like that, copper, uh, things that have been hoarded up in the past. We like the mining stocks a little bit better. That's the gold and silver one here, the XAU.X. And there are some things, that, yes, they have broken out. Yes, they got support levels. But the GDX over here has done well too. And you can see that this has paid a much better return here on the GDX. You can see that weekly ascending breakout versus the GLD, where the GLD probably had about a 13 or 15% move. I haven't added it up, but I like the movement dollar price wise in that GDX right here. It had a nice run from $40 down around, slightly, up to $54 here. That's $14 move over a couple of months here now. And so, look, there's a lot that's going to happen in this Morgan Stanley one, the CRX.X. That's where we started there on the weekly. And all of these metals and all of these oil services and whatnot, there's a lot of headwinds that do lay ahead. However, the commodity side of things is, does QE3 in the future burn those much higher in calendar 2013? So far, these names have been beaten down all year. And these names have underperformed uh, other parts of the market. They have. So beware, be careful. There are lots of things that can happen moving forward. Um, you have to be able to separate what drives these prices higher. And does that QE3 massive liquidity injection over a period of time, 6 to 9 months out, create another bubble in the commodity related names and energy names? If we did the right thing in this country, this whole darn sector right here would just really go. All the oil services, we can produce our own energy. Natural gas, we got a ton of it. We can start selling it. There's all kinds of things that can happen going forward. And they're all good things, too, that we would like to see happen. However, once again, I will go back to the CRX.X. Have some cautionary. There are some fundamental headwinds. And it's a longer term perspective that we'll be looking at every week to see that where these things develop, and if they don't develop, we'll be the first one to tell you.